There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB on this Tuesday afternoon. I'm Nadine Blaney.
And I'm Juliette Sarli, and we were just talking, Nadine, we may be at or very close to a record high here.
It is all happening. We've got Eurostoxx futures soaring. We have companies reporting in Europe. We've spent so much time focused on US earnings, but BP is out, I know, Diageo's out already as well. So lots to digest. US earnings season is continuing, but this is the pretty picture that Juliette was speaking of.
Yeah, 1.3% gain there on the CBO 200, the ASX 200 rising by more than 1% as well. Its biggest gain in 2 weeks. A lot of these interest rate sensitive stocks rallying, and that was on that expectation that the Fed is going to cut sooner, perhaps even deeper, after that pretty dismal job starter on Friday.
Still digesting that and all of its implications. So are we ready for a rate cut? Well, I know we are here in Australia as well. On the corporate front, few things to note. Our stock of the day was EOS. You can listen for some analysis of that. We just actually spoke with the CEO, but it wasn't just EOS with that sort of game-changing contract that they won, but also Austal.
Yeah, Austal are now going to be the Commonwealth's key shipbuilder, so finalising that deal with the government and therefore increasing its EBIT forecast as well to around 100 million, up from its earlier forecast of 80 million. So that was straight out of the blocks this morning.
Now, we are in reporting season, so it's not the thick of it. I'm not going to overstate it, but we did have Credit Corp, and we spoke with the CEO as well. We are your destination for reporting season coverage, but Credit Corp is actually the best performer by percentage change as well, up by 17%. And I will give you a bit of a heads up. We'll be speaking with Ian McCoon of Pinnacle. He's the CEO there and founder as well, and that's tomorrow. So we're really starting to get into the swing of things.
A lot coming up, a lot in the calendar. All right, let's have a look at the sectors. The banks looking pretty good today. CBA up by around 2%. So, of course, a lot of these moves as well as we start to price in rate cuts.
Yesterday, gold miners did superbly well, and today yet again Regis, you can see they're up by 2.5% to $4.24. Northern Star putting on a further 1% to $16.42.
And there are the defence stocks we mentioned. So Austal up by around 8%, Drone Shield up 7%, and Electro Optic Systems, wow, look at that, 43% gain, $4.22 on that. What was it, $125 million deal, I think?
Yeah, it was with a NATO country. Yeah. And so, you know, the thinking is, and I read some analysis by A-REITs, you know, that this is sort of proving up their drone defense system. It's a laser system. It's the first one in the world. And, you know, once you get one of these contracts, it can sort of open the floodgates to more to come. But I had a little chuckle because I thought it was pretty incredible at noon hour that the shares were up by 30%, and now it's 42%.
All right, let's have a look at some of the other stories. CBA that we mentioned going high. Look, it is going to take a $130 million hit in the second half provisions amid the transition to make Bank West a fully digital brand, but that actually won't be then released in its earnings result, which come out next Wednesday the 13th.
Already?
And we are going to be speaking to Matt Common, the CEO.
We sure will. All right, Telix shares are plunging, warning of higher operating expenses in the first half. And Jules, there's the Credit Corp results, seeing shares up by 17%.
And Austal, of course, we've touched on as well. Meanwhile, Boss Energy also a little higher. Look, it defended its handling of last week's downgrade, which wiped over 40% off the company's value in a single day.
Yeah, it was pretty dismal. That was also covered on the call today, if you'd like to have a listen to that program. So rare earths, again, in focus as the government considers a floor price. So that's Lynas and Iluka there.
And TPG falling a little bit, but it will return around $3 billion to shareholders following the completion of its fibre network and fixed business, that sale to Vocus Group.
Well, let's bring in our expert guest. Mark Gardner from MPC Markets is here with us. Mark,
good afternoon.
Welcome. Are you on the defence train? If you're not on it, Has it been missed?
No, heavily on it actually. We've got structured investments with a full geopolitical strategy, and we've been heavy in defence for probably since February, March. Done very well out of it. Probably sold some too early, like Drone Shield. We sold around the 220, 230 or something like that. I mean, traded $4 today. Clients cursing me, but they obviously that dip in April, they did get to 60 cents. So, and Electro Optic Systems, I mean, it's under an 800 mil market cap. That contract win today is double what Drone Shield's collected this year, and Drone Shield's at 3.5 bill market cap. So that 43% might actually not look that, it might look like cheap over the coming weeks. But that's, and particularly with that NATO area as well, because Trump wants Europe to pay, basically, or NATO to pay for themselves. So we're heavy in European-focused defence businesses. We've got Defend ETF and DTEC. For those who don't have US access, we've got Raytheon, Palantir, Leonardo, which are European-focused defence. But yeah, very strong on that. And there's $1 trillion worth of increased spending over the next 2 years coming into that sector. And it's going to be, countries will want to spend at home, and it's the Europeans that are going to have to spend the most amount of money. So that's where we're focused. All
right, let's talk about Palantir. And I note this interesting tidbit as well, that the surge in its stock price has made another billionaire.
Yes, and it's the most expensive company in the world. Second place is half as expensive, but it did just get a $10 billion contract. And looking at the, I looked at their income and profit flows. When what they've done in the last 9 months, most companies would be lucky to achieve in a decade. It's been quite extraordinary. You would expect it to probably peter out a little bit, but I've thought that before. We wrecked it back in November, and I raised my eyebrows and went, okay, and I wasn't really behind it because it just looked eye-watering then. That was at $70. I think it's 170 now. Yeah. So those hyper-growth companies particularly, I think the Department of Defence is going to try and diversify away from them a little bit. They're a little bit too stuck to them, but and it's a lower margin contract, that Department of Defence. So, but look, it's the numbers every single quarter have justified the 1,000 PE or whatever it is, and because they just keep winning contracts. I think they've won 140 contracts in the last quarter. Between $1 million and I think about 60 of those are above 10 million, and then there's the massive government contracts as well. So huge spending.
Geez, so this is the thing, and we talked about this on the call today. With these defence stocks, if you take the locally listed ones, for example, I mean, you can often think that valuations are crazy, unjustified, but Palantir is a perfect example of the fact that sometimes, I mean, if you don't want to ignore these really strong thematics if the numbers are there to back it up, but you've got to sort of brace yourself that if it's up 40% in a day, it can be down 20% tomorrow.
Well, it can be, but we've been increasingly just looking at those more and more US stocks and using that rule of 40, which Xero uses. I wrote a piece in the guest view this afternoon for that. And it's a really good way of, it's more of a rule of thumb than a magic number, but if it's just a good formulaic way to see if those forward PEs are justifying, with the growth numbers. So, and it's a really good disciplined way for growth companies to maintain their metrics. So Telix, for instance, is a growth company. Its score in the rule of 40 was at 70, which is even better than Xero's, but the OPEX spending today essentially brings them back down to that 40 mark, and it's a bit of a consolidation in terms of them consolidating and investing in some future growth, because they need their manufacturing facilities, they need geographical expansion, etc. But as long as they maintain that 40% mark, and balance that revenue growth and their spending, it's a really good business model. And look, since the new management came in with Xero 2 years ago, I mean, look how well they've performed, and that disciplined management of that growth plan has played out really reliably and predictably. So, and it's not, we don't have a plethora of growth companies in Australia, so it's something that we've really been using more and more as we focus on US stocks where there's a lot of hyper growth and a lot of overvaluations. But yeah, it's a really good way to to see if it's worth putting your money into.
All right, well, you can catch some more on that in our newsletter apparently this evening.
I wanted to ask you about reporting season. Macquarie just putting out a note saying the weak results period is looming for the ASX after a good July month. So far, we've had pretty good numbers. Credit Corp, ResMed. Is all the good stuff coming out here, and we're going to get some skeletons at the end of the month, which will weigh on the sentiment?
Perhaps. I think you want to, as TLX's announcement today, that was only a 3% increase in operating expenditure, and it got absolutely belted.
Yeah, I was going to ask if that was an overreaction.
Yeah, a bit of an overreaction, and on top of the fact that their subpoenas are a very routine thing in the US, and people are worried about that. The ASX does tend to punish really aggressively anything that disappoints. So I think you're far better off going with your high conviction, your high conviction stuff, or waiting till after the fact. And I mean, we bought some more TLX today. It's one of our high conviction picks. But if there is an overreaction on a company you like on a 2 or 3 year basis, the ASX does provide really good buying opportunities because everyone abandons ship. So. Sort of almost a bit of a taco within itself. Everyone just sort of chickens out and they don't want to have anything to do with it. So I think some of those defence names may slip back. The reality versus the forward earnings may clash a little bit. But those companies that have been reporting well and updating well in recent times and are sitting at reasonable values, that growth at a reasonable yield, I think will do quite well because there's not too many options in dividend stocks at the moment. Yeah. So you're sort of having to find stuff that's going to grow as well. So that sort of area where that growth income blend, I think they'll be the ones that people chase after.
Any thoughts on rare earths? Does it look like a more attractive space when you've got the polys weighing in?
Look, I mean, it's more for the traders for me. Only because if China and the US get together and hold hands and sing Kumbaya and then rare earths come back from China, those rare earth stocks are going to get belted. So I think you need to be very agile. If you had a long-term view months ago, that's why people really like Lynas, because it's really one of the only refining options outside of China, to be honest. It's over 90% in China. But that's probably played out now. I think the risk might be to the downside. Not to say that it will fall, but yeah, the risk is that there is a favourable trade or a peaceful trade deal done, and then they do swap rare earths for chips, which is what it's looking like, and then China can just open the floodgates again, and then all of a sudden you might see those valuations pull back. So if you're going to play there, be agile because they're not cheap at the moment. But yeah, maybe keep it in mind if they dip. If things flare up again, we know that the semiconductors and the high-grade chips and the critical minerals are the tools that China and the US are going to use first to try and hurt
Putting
each
all
other.
their chips on the table, maybe. Mark Gardner, thank you so much. As always, Mark Gardner from MPC Markets.
Okay, so let's get a view on Electro Optic Systems, EOS, from Michael Wayne from Medallion Financial and Sean Hickman from Market Matters.
I'm sometimes a little bit wary of some of these grand contract announcements because in reality you still have to deliver on them, and we don't really get too much in way of the terms of these contracts. Over what time frame is the revenue going to be received all at once? To get that contract accounting disconnect between booking the revenue and cash flow coming through the door. But it's hard to be negative on it. It's without doubt an example of this business moving into a more mature direction.
I would call this an aggressive buy. Okay, I like to have the word aggressive beforehand. This is a game-changing contract on paper. I think you said 125 million with the currency conversion, 71.4 million euro. Last year's revenue was only 177 million. So you're talking about a massive change here for a company in a hot space. And it's very important to bear that in mind. This is a very, very hot space. At Market Matters, we have a Q&A every Saturday morning, and it has been dominated this year by Drone Shield.
So that was sort of a buy. Well, you heard aggressive buy from Sean Hickman, but yeah, Michael Wayne just can't can't buy a stock like that on a day like today when the share price is up by 40%.
Why would you? That's totally against what Warren Buffett says, isn't it? Let's have a look at the leaders and laggards. Credit Corp, of course, as we mentioned, up 17% on its earnings. And don't forget, you can listen to Andrew's interview with the CEO on our website.
Luca, that's in relation to the rare earth story, Austal as well. Lots of political policy sort of tie-ins here with IDP Education and the Labour government, saying that they will be opening the doors to some further migrant students. And that was actually featured on the call today as well.
Looking at the laggards in today's session, Telix Pharmaceuticals we've touched on there, and as Mark says, potentially a little bit over penalised. Endeavour Group, there are a couple of broker notes out about this, just the cloud over the chair leaving without really any clear indication as to why, and then the fact that you've still got the transition of the CEO against for another 5 months or so. Neuren, Light & Wonder, Worley also weaker.
Light & Wonder does report this week. I can't remember if it's tomorrow, just to be honest with you. But so just a little bit of selling leading into the result. In the small end of the market, Artrea Limited, that came up in conversation with Arms Rosenberg from Minotaur Capital yesterday. She's got a position in that one. And Trajan talking about revenue lifting up by about 7.4% or something like that on last year.
And let's have a look at the laggards in the small end of town. Pacific Smiles down 12%, along with weakness in Bougainville Copper, Peak Minerals, Silver Mines, and Amplia Therapeutics.
So, what's on tonight? Let me tell you, US PMIs are due, expected to increase, services PMIs that is, international trade as well, with a $62 billion deficit expected.
We've also got the earnings coming through from AMD, Caterpillar, Pfizer. I think there's also Rivian, Snap. Quite a lot coming through tonight.
And there'll be a read through here locally with Caterpillar because, as you know, Seven West Group is the local distributor. There we go. Light & Wonder is tomorrow. Always find out what's going on by this little sum up at the end of the day. And News Corp, REA Group as well. And that just made me think.
Pinnacle as well.
Pinnacle, yeah, and we'll be speaking with the CEO. So the latest edition of the Investment Committee is up online if you'd like to have a listen. Just remembered that REA was sold out completely heading into July. Ben Clark from TMS Private Wealth was away. I did my best to stand up for, I knew he wouldn't want them to sell it, and he was appalled that they dumped the position in REA Group. But look, there was plenty of changes made. Some were in, some were out. I think you should take a listen on ausbiz.com.au. At the top of the website, you just look for series, and it's the Investment Committee.
That'll teach, Ben, when you take a day off.
This is true.
All right, it is a very solid session. We just had the market up there. We were too busy chatting, but up 1.3% and very close to records here as well on the ASX 200, closing high by 1.2%, 8,770. I think we're only a tenth of 1% off the all-time high.
Right across the Asian region, there's been buying today. US E-minis are higher, NASDAQ and S&P. European futures are looking solid, so who knows what tomorrow will bring.
Did someone say bubble? All right, we'll see you from 9:45.
See you then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.